Now I have my big screen. Can you guys see my screen?
Yeah.
Yeah.
Is for any of you, is it too big?
No.
No, is it okay?
You have multiple screens. You have the.
Multiple windows. I'm sharing the whole screen.
Okay.
I will change it to only one screen when I talk very specifically.
Okay.
Okay. If you don't mind, maybe you can go on mute so that we don't hear echoes or whatever. Anyway, see, there are last week Venkat talked about a lot of capabilities in technical analysis. And Venkat is 100 times more qualified than I am. There is a little echo coming. Okay.
I have muted all the noise makers.
Okay. Good. So I am not as qualified as Venkat. Venkat is really very, very good and very deep into technical analysis. But I have been doing my own technical analysis for the last 4 or 5 years. And the one that I use a lot is this Bollinger Band. So let me just talk about Bollinger Band. It is something that I understand very easily, and it is very easy for people to understand, which is it uses a simple moving average and it uses a standard deviation outside of the moving average to create a top band and a bottom band. So that is basically the technique. So what happens when you use a standard deviation, as you all know, is that 2 sigma gives you about 90 to 94% of the times. So about 90 to 94% of the time, the stock price will be within the band. Okay, so I'm just going to bring it down, and this is the screen I'm going to focus on. The one in the middle that you see. I brought up Comcast. Is one of the stocks in the platinum portfolio that Nari sent out to everybody. In Comcast, if you can see this band, so the top band is 2 sigma over the middle, which is a simple moving average. I'm using a 20-day moving average. And by the way, I want to tell
Bala,
you.
I think
Yes.
you have to click on that specific window where you are showing the Comcast stuff, because I'll still see the Bollinger Band definition window.
Oh, really?
Yeah.
Okay, then what I will do is there a way I can
just move it on the side, the Bollinger Band window? I think that should be good.
I think it is on that different screen. We have 2 screens.
Okay, well, where I don't know. I only see the Comcast screen.
You need to refresh the screen or unshare and share it again.
Okay, let me unshare and share it again. Okay, so I do that.
What about others? What is the screen you guys see? Do you see the Bollinger Band?
Yeah, the same definition screen.
Okay.
Can you remove the definition?
Maybe you can just minimize that Bollinger Band definition screen, Bala.
Okay.
Yeah, that will work. Just minimize that.
No, I actually closed it out.
Okay, so now you're not sharing.
No, I'm not sharing at all. Okay. Now I'm sharing my screen. Now can you see my screen?
Yes.
Yeah, perfect.
I don't know what happened there.
Now we can see only the screen, so it's a little smaller, but there's no blocking definition and all.
Okay. So now can you see the Comcast big screen?
Yes, we can see.
Okay.
Yeah.
I'll put this down here. So now I made that band big. So however big I can make, I have made it. So the point here is all the 2 sigma statistically is about 94%, right? So 94% of the time, the stock price will fall within the top and the bottom band. So whenever it crosses the band here, can you see my cursor there?
Yeah, so we can see. So I have muted almost everyone. So okay, I will answer. Okay.
Okay, yeah, if you do that, that'll be great. So if you go to the top here, if you can see, that's when it crossed the top. That means that it is outside of it doesn't necessarily mean you have reached the top, even though you can see that it has reached the top. So it is time to probably take a covered calls or something like that. It would be a good idea to take at this time. But anyway, the point here is that it has crossed the thing. Now you have to watch for some other signal. So I use a signal like a stochastic momentum index, or last week he introduced this RSI index, which is also very good. The RSI index is now giving you a sell signal with the red here at the same time. So then that additional signal will also give you a way of making sure that you can take a covered call on the stock at that time. So the signals that you're looking for is where the stock is it towards the bottom section of the band or the top section of the band? And this is a 20-day moving average. A 20-day moving average normally gives you probably about one signal a month, either on the top or at the bottom. So you will have about 6 signals in a year to buy or sell. I mean, to buy and 6 signals a year to sell. But then this is not to be used as a signal for buying or selling. This is to be used as a signal that, hey, it is coming to the edge. So you need one more indicator where you can use RSI, or you can use stochastic momentum index, or you can just use the candlestick reader. So there are candlestick, for example, when it goes to the bottom here, when you have this kind of a hammer or whatever shape, that means the stock is going to reverse. In this case, what you're looking for is a signal where after crossing the band, you're waiting for a signal for the stock to go up. Once it goes up, then you buy. That means the stock is going to oscillate between the bottom side of the band to the top side of the band. So the whole idea here is that you are going to buy a platinum portfolio kind of stock where you're going to hold on to the stock for a long time and you're looking for entry points. So if you're going to buy and hold Comcast for their dividends, which they give about 23 cents a quarter, if you're going to keep Comcast for long-term growth because you think the stock is going to be, right now it's $52, you think the stock is going to be $70, $80, $90 in the coming years, now you're looking for signals to buy. So you're looking for this signal where it touches the bottom band and then it started moving up. This is a signal to buy. This is another signal to buy. And so those are, otherwise it's not a signal to buy. So you see one signal to buy here, another signal to buy here. After it touches the bottom, it comes up, you pick it up. And this is probably a signal here to buy. So in this is a 1 year chart. In this 1 year chart, of course, you have a big pandemic news in February that is skewing the whole situation. During the pandemic, you probably don't want to catch the falling knife, as they call it. But during normal times, you will get 3 or 4 signals. If, for example, I want to show you Merck, for example. Merck is, it's not one of the platinum portfolio stocks, but it is a good stock to buy. Now, if you can see right now, it's at a point to buy because everybody is all the fundamental analysis which you do separately, that indicates the Merck is going to get back to around 85 to 90. Right now it is selling at 74. So it is probably a stock you could buy and hold. It gives you a good 65 cents a quarter in terms of dividends, and it is probably going to go up 15 to 20% in the next coming year. So it was already hitting high of 87 here. It will probably get back to that 87 range within the next. So each of these is about a month. In about next 6 months, it will probably get back to that. And there are a lot of buy points here. See, there is a buy point here. There is a buy point here. And I would say currently it's a buy, even though it's went down today. So I'll probably wait for a signal to see a green shoot to go up. When it starts to move up, you pick it up. And now you see a good support level here. The other way to look for it is the support level. So there is a good support here at this level where we are at 73.94. There is a good support for the stock from a technical point of view. So it is at a support level. So this is probably a good stock to buy at this time. That's what I would say. Anyway, this is a technique that I have been using for the last 4 years on stocks that I hold for multi-years. So if you're going to buy a stock and hold it for 2 or 3, 4 years, you can use this technique and the platinum portfolio that we just got there, and you can go over each one of them and see which one of it is in a buy position or in a support position, and you buy there, then your returns will be a little higher.
Bala?
So that's all I have. I am ready for any questions. Yeah.
Bala, you said it's holding for 4 or 5 years, but at the same time, you mean, I don't want to put words in the mouth, but what I'm saying is even though you hold for 4 or 5 years, you buy and sell depending on its bottom or top. Am I right?
No. You don't sell at the top.
I know that. Okay, go ahead.
You sell covered calls at the top. So let's say you hold 500 shares here. I'm just making it up. So
Okay.
you bought 500 shares here. When it goes to the top here, for example, this when it drops here, this is when you sell a covered call. When you sell a covered call, you collect some extra money. When it touches here and comes down here, you sell a covered call there. So as soon as you make money on the covered call, you buy back the covered call and make some money. So you know that when it hits the top, it's going to come back a little bit. So the top side of the thing is where you sell covered calls. Bottom side of the things is where you accumulate more and more.
Oh, okay.
So this is a strategy by which you want to hold on to the stock for 2 or 3 years. And the Merck is a good one. It's probably going to be 20% higher than here in the next 2 years.
But why don't you sell it at the top if you know that it's going to go down and cash in and then buy it at the bottom?
You certainly can do that. But I'm not talking about the strategy as much. You could use a strategy to just sell it, but then you will not get long-term capital gains. So you have to worry about some tax implications and other things. If you are ready for all short-term things and you are doing it as a trade every couple of months, you certainly can buy it at the bottom, sell it at the top, buy it at the bottom, sell it at the top. You can do it all the time. It will work very well. This is a very good technical indicator, and by itself it should not be used. It should be used along with, when it goes down like this, every time it looks like it is giving a signal. So that's when you use stochastic momentum index or RSI index. See, in this case, you only got 1, 2 signals, 3 signals to buy for Merck in this year. From RSI point of view, RSI is the futuristic indicator. So you have to use it along with another indicator, but this gives you a kind of a band idea as to which side of the band you are in to be able to accumulate more shares out.
So Bala, question, Bisham. So you said you got 3 indicators, right, to buy. Can you go back to Comcast if that's okay?
Yes.
So how did you figure out that indicator?
So the one I use here is the stochastic momentum index. The stochastic momentum index is somewhat like the stochastic fast that Venkat was talking about. It is pretty much the same thing. It gives you a lot of signals. Say, for example, stochastic is for almost like a day traders, it works very well. But here, like for example, in this case, so it came to the bottom here, Comcast, and on November 3rd, you got to shoot up a little bit. So that's a signal. So you go and look for that signal here. The stochastic momentum indicator is at the bottom of your band. So that's a good buy position. That is also giving you a buy position. Your RSI is also giving you some sort of a bottom here. So it's a buy position. So you can confidently buy at this position at 42.15. If you have done that, you're going to do very well. You have gone up almost 25% from that point to today, from November 3rd to now. So you use the Bollinger Band to give you where you are in the band. If you are towards the bottom of the band, if there are other indicators giving you, hey, go for it, then pull the trigger and add to your position or get an entry position or anything like that. You can look at another stock if you want.
Yeah, can you go back to Merck, please, 1 second?
Merck, yeah. Yeah.
Okay. So what you're saying is currently it is probably a buy because
Yes.
your Bollinger Band is indicating a buy, and also your stochastic indicator also is pretty low, right? So
Yes.
that is also a buy signal.
Buy. RSI is also a buy.
RSI is also low. So you have a 3 signal signifying that Merck is a current buy.
Yes.
Okay.
So Bala, why is Bollinger Band a buy for Merck?
Bollinger Band by itself is not a buy. So the one thing I want to tell you about Bollinger Band is Bollinger Band is indicating the stock to be either near the bottom or at the top. See, I use different moving average. Here, I'm using 20, right? Let me change that. Let me change that to 50. Sometimes I use 50 instead of 20. I will use a length of 50. Okay. So if you use the length of 50, that is a 50-day moving average for the same band, you see that it is a buy in the Bollinger Band also. So it depends on 20 gives you a lot of signals, 50 gives you a little bit less number of signals, but 50 gives you really sure signals. So you can play with the parameter. Yeah, sometimes you can use a 20-day moving average, sometimes you can use a 50-day moving average, or you can add a 50-day moving average to your 20-day moving average chart just to see how the support levels are. This is a screaming buy. That's what I would say.
Yeah. So
Bala,
I'm looking at the 50-day average. So it is at the 74 is at the lower end of that band,
Yes,
right? So
yes.
definitely a buy. Okay, good.
Yeah.
Bala, I
Bala-
just had a question. I mean, the technical analysis, like for each stock, takes a long time. Like, approximately how much time in a day do you spend on this? Because, like, I have a portfolio of about 60 stocks, and to do this technical analysis for each of those, on a regular basis, would really take a long time.
Yes, it would. What you need to do is, if you're using Thinkorswim platform or
Yeah.
whatever platform you're using, you could set up alerts. So, for example, you could set up an alert here that anytime it touches the bottom of the band, it will send you an email of any
Okay.
of your 60 stocks. So you put all of your 60 stocks in a watch list, and then you put all of the watch list in scan.
You have to set, yeah.
You have to go and set it up. I have not done that yet. Like for example, there is a way to give you top go signal. I have, it's something that I can do. It'll take a little longer time. I don't want to waste everybody's time.
No problem. Yeah.
But you can set up alerts.
Okay.
When it hits the bottom of the band, it will send you an email. When any of your 60 stocks hits the top of the band, it will send you an email. Like that, you can set up an alert.
Okay.
And that will give you a trigger point. It has hit the bottom, so I should go and add to the position, or it has hit the top, so I should go sell. It will give you some sort of an idea through the alert mechanism. You can do that.
Okay.
Bala,
Okay.
quick question.
Yes.
Is the 20-day and the 50-day? I'm a total novice in this, so it could be a silly question, so please bear with me. So the 20-day and the 50-day, is that the typical how far back you go to kind of to recognize a support level for the stock that you're analyzing? Not more than that?
Not really, but not really. I would use 20-day mostly.
Okay.
Sometimes what happens is the 50-day gives you more sure signals for long-term holding. So in my theory, 50-day moving average, and you're doing 2 sigma on it. It's very simple mathematical equation. So in a sense, a 50-day moving average will give you a signal every 50 days. A 20-day moving average will give you a signal every 20 days, approximately.
Okay.
So 20-day moving average might give you more signals, and a 50-day moving average will give you less signals. So the band will be a little wider for the 50-day moving average, and for 20-day moving average, it will be a little narrower. By the way, there is another point here, is that the band within the 50 days, like for example, here the band is very wide, it narrowed here, and it got a little wider here, and it narrowed again, it's now widening again. This widening and narrowing of the band indicates the volatility of the stock. If the volatility is low, the band will be narrow.
Right. Yeah.
If the volatility is high, the band will be wider. So if the band is wider, the options premium will be higher. The extrinsic value that Nari talked about in the earlier options thing, the extrinsic value will be higher. So sometimes when the band is higher, the band is larger, it gives you some other indication like that. So if the band is large and it goes and hits the top here, this is definitely a time to go and collect covered call at that time.
Sell covered call, yeah.
Yeah. Hey, anyway, Dinakar, did I answer your question?
Yes, you did. Yes, Bala.
So, sorry, one last question, Bala. So, can you just quickly show in Thinkorswim how do you get Bollinger Band and the indicators?
Okay.
Yeah, thanks, Nari. That was my next question, actually. So, yeah.
Okay. So, let us say you go to studies, you go to add study, and then I just go to the same thing here. So B, and then you go to Bollinger Band, and then there's a Bollinger Band crossover. This crossover is the one indicator, Gopi. The crossover will tell you when it crosses at the bottom or crosses at the top, it will give you an indicator.
Right.
Band. So when you say add a Bollinger Band, it just added a Bollinger Band. Another 20 days. So it puts a 20-day moving average on top of 50-day moving average. This is not good. So you go and edit your study, and I go here, I eliminate the 50-day study, and then I go to the 20-day study, and I can put the parameters 20 days. Not always use -2 and +2, that is the standard deviation. If you do some other standard deviation like 1 and 1, it will give you narrow the band. 3 and 3 will widen the band. It's just a statistical, it's very simple statistical thing. So
Bala,
yes.
On this screen you have here the stock price in candlesticks as well as the volume.
Yes.
How do you add these additional things like the stochastic and the RSI Like, do you have to create an additional window for that?
No. As you can see, the Bollinger Band I have added on the top, and then a volume it added here. I can eliminate the volume if I wanted. Then you add a study lower. The last one is empty. So when you add a study, so when I added a study stochastic momentum index, it added the lower band here automatically.
Oh, I see. Okay.
When I added a RSI index study, I added this after Venkat's lecture, and then it added one more band here like that.
Oh, I see. Okay.
So you can just go edit this. So all of this thing is done through the edit studies, and all the studies are the left here. You can add them from here as well.
Yeah. Okay, good. Thanks.
And
then you can change the sizes of this. For example, you can change the size, volume. I always have a little bit of a volume there. So if you want something to be bigger, wider, you can do that. You can make it narrower, wider. You can change the sizes of this.
Hey, Bala, this is Jorge. How fast can you change to Pfizer, for example, and have the same representation for Pfizer instead of Merck?
Yeah, just type the...
Yeah, this is Pfizer. So Pfizer, take a look at Pfizer here. Pfizer, according to RSI, Pfizer was a buy 2-3 days ago, and Pfizer is still selling at that point. And if your fundamentals on Pfizer is good, Pfizer is also a buy.
Yeah, Pfizer is definitely a buy right now.
Yeah, I would say Pfizer is a buy as well. On the 20-day moving average, it comes up a little bit. On a 50-day, I'm pretty sure it will be a buy. I can change it.
Yeah, thanks a lot, Bala. That was great. So I have recorded the session. So if you have any doubts, you can rewatch it later on. And
I have another.
Thank you, guys. Thank you very much for the opportunity to talk about my ideas. Thank you.
No,
I have
this
a mechanics question to anybody kind of thing. Once you recognize the buy signal, essentially, does anybody particularly care about market order versus limit order? Because it's probably not going to make a big difference in the long run anyway, right?
Never put market order. Always put limit order. 100%.
Right. Okay.
Yeah, limit order is better.
Yeah.
See, because you don't know. In 1 minute, the market might change, and the price may be much higher than what you're willing to pay, right? So even just put the limit order and put whatever is the current price.
Yeah.
Okay. Thanks a lot, Bala. That was fantastic.
Thank you.
Ganesh, I see your microphone keeps going in and out. I don't know, for some reason. Can you say something?
Can you hear me okay?
Yeah. So we are good. So you can, Ganesh, I will make you the presenter, and you can share your screen and proceed.
Okay, fantastic. My start video is not enabled yet, so hopefully...
No, you don't need a video. I mean, okay, yeah, that is fine. Are you able to share your screen? Just go.
Let me see one second.
Go to the top and share desktop.
Share desktop.
Share content desktop, yeah. You can choose, if you have multiple monitor, you can choose which monitor and then click share. Yeah, we can see it.
Can you see me?
Yeah.
All right. So thanks everyone. Thanks for being here. And thanks Nari for giving this opportunity. What I wanted to talk about today was a product that I have developed with a team, and we have been working on this for several years now. And we have data for going backwards about 14 years. This is for mainly the US equity, but we also have a similar setup for Indian markets if somebody is interested. But currently, the US market is the one that's available for people to look at. And the plan is for us to release that as a paid subscription in the coming weeks and months. So, having said that, I will talk about what the reports are and what it does and why we ended up creating this product 13 years ago. So, as retail investors, first of all, the biggest problem we all have is we don't have enough time to look at, stock market and doing the analysis on a daily basis. We have our own life to live. And, many of these people that are interested in this are probably not day traders, but hopefully they are daily traders. There is a big distinction that we think between a day trader and a daily trader versus somebody who buys a portfolio and just sits on it for many, many months, right? So what we thought was, and this is number one, this tool was developed for people who are very active in the market, but not taking this as a profession and looking at it every second of every day, because we all have other important work to do, our primary job plus other responsibilities. That's one. Number two, if you ask any retail investor, the constant thread that comes out is, hey, I got into the market and it started going down. And every time I start buying something, it keeps going down. And when I decide to come out of it, it starts going back up. I don't know how many of you have heard this, but I have heard this many, many times in my life. So we thought that, the stock market doesn't really work this way. And there need to be something that a retail investor must be doing, which is kind of, exactly opposite to what the market is doing and market is trending wise. So we decided to get down to it and write a software for this. And this was the result. So what we ended up doing was we created our own algorithms. We wrote a rules engine, and we wanted to make it simpler for people that are using is the retail investors. And so what we have set up is, at the end of the day, for every single US traded equity, our engine runs the analysis, takes the historical data to whatever extent that it is needed, and it will give out a recommendation as to whether it's a buy or a reduce your portfolio or a sell. Just three simple recommendations. We don't get into overweight, underweight, underperform, overperform, neutral, all this. So we just give a simple recommendation on every single stock, and it'll only have three options. Either it's a buy or a hold, or you wait to buy, or reduce if you already own it. What that means is, if you already have a position on it, it's a better idea for you to start coming out of it. Or if you don't have a position on it, probably there is still a better opportunity for you to get into, so you may probably have to hold. And the final option is to just sell. When it hits a threshold and the engine says sell, we give a recommendation for sell. It's as simple as that. And so here there is a dashboard. I'll start with the high level. Any questions so far?
No, it's going good. So you can also set up alerts so that you get an email if buy changes to sell.
Yeah. So our paid version will have, you will be able to create your own portfolio. In this, free version, we are just putting out our canned reports and show people what the product is capable of. In the paid version, you will be able to set up your own portfolio. Our initial portfolio is up to 20 stocks, and on a daily basis, it will send an email alert. I can show you how the email alert looks like. This is going back in the past. So if you look at this, forget the formatting, but this is how the email will look like. So this is a portfolio of 20 stocks. And it will, well, in this one, there is more than 20 stocks. So it will give you an indication as to what is the, so this email came on 21st of October, and it gives you a recommendation as of that day. and it also gives you a 20-day trend on whether it's a buy or a reduce or a sell. So for example, if you take SAP, as of today, as of 21st October, it says it's a reduce, and the trend for the past 20 days has been 6 days it has been a buy, 7 days it's been a reduce, 9 days it's been a sell. And you can log in to get further details and see other reports for the paid version. And for various scales, it will also let you change your portfolio n number of times on a monthly basis. If you decide to completely come out of a stock, or you don't even want to track a certain stock and you want to change your portfolio, you will be able to log in and edit and change your portfolio. Does that answer your question, Mary?
Yeah, perfect.
Okay, so coming back to the free version. So here you come to tenetanalytics.com and we have these charts. So we have various sectors. I'll just cover a couple of them because there's a lot of details here. So first one is very simple. We created our own set of portfolio stocks. So I'll show you one, for example. So this is an ADR in which we track Israel, China, and India stocks. Okay, so if you take like China, for example, these are the stocks we track, and what we do is to keep this portfolio fresh. Every month, we take the best performing stocks out of various sectors. We have divided the stock market across various sectors, and we have our own custom curated market caps. I will show you some reports and you will see market cap, but that market cap will not jive with the actual dollar value of that particular stock. So you might be wondering, why is a stock treated as a mid cap while it is probably in the hundreds of billions of dollars? That is because we track our market caps in a completely different aspect than what the dollar amount and the traditional way of looking at it. And so we update our portfolio best performing lists on a monthly basis. So your sector-based reporting and all is fresh with the best performing stocks. So it always maximizes somebody's gains. Having said that, so if you look at this China ADR, these are the stocks that we track in the China ADRs. So as of yesterday, every single one of them is a buy. So, and this means something, and I'll show you the sector-based reports for various sectors, and you will get more details as to why it says so. Now, for a given stock, we have these various models called classic recommendation and a model 3 recommendation on those stocks. So what this essentially means is what we recommend for these stocks under the various criteria we apply to those models. So if you look at classic recommendation, this is a little bit more aggressive. So I'm looking at Baidu's classic recommendation. Okay. So what you are seeing here is last 2 years worth of Baidu's recommendation. And our recommendation is these dots, and the orange dots are, here are the legends. The green is a buy. The orange is a wait or a reduce. Wait means wait to get in. Reduce is if you have that in your portfolio, you reduce your exposure. And when it is a red, it is a sell. So if you look at, this time frame, right? So in the aggressive recommendation, things might change on a daily basis because we apply a very aggressive ratings to come up with this recommendation. But you can see, from April 23rd to April 25th, it was a sell. And why it is a sell? Because if you drag that for the next month or so, it went from about $324 to $109. So this was a steep fall. And so what it does is it kind of picks up on some of the happenings, and it uses that information to give a recommendation, and it keeps changing. So you might see one day it's a sell and the next day it might turn into a buy. And that is because this recommendation, this model chart is very aggressive. And if you see of late, Baidu has been on a tag. Okay. So around November, it kind of turned around. and for a few days it was a reduce or wait to buy, and then it clearly turned into a buy, and it kept going on and on. And occasionally it will come to a sell. What this means is we kind of try to minimize somebody's exposure and let people take some profit out of it. So, if at all it turns around, you are not completely out in the open, and you might at least be able to cover something. And you can always get back in when the indicators turns around. So that is the aggressive recommendation. And the blue line is basically our model's relative strength ranking. What does that mean? So if you look at this, on this particular day, right, when it turned around, the relative strength ranking for Beidou was 142. And how does it come to that number is basically our algorithm, our proprietary number. What this essentially says is, out of a bunch of stocks in its characteristics that belongs to Beidou's characteristic, this stock ranked at a number of 142 overall. And you can see with that, it gives you an indication of where the stock rank among its peers. And you can make a judgment call whether this is an indicator to get in or not. So from this point on, if you see, Beidou turned around and it went up. And right now, Beidou's relative strength is like number 3 and number 2 for its set of stocks. So it is really doing well. And it turned around from 142 and it went all the way to 3, which is where you ride the stock all the way to the top. Make sense? Any questions?
So what are all the general factors which go into your algorithm, and how do you take into account some news, right? Because if you have a standard algorithm, how do you build in the news component?
Yeah, this does not look into social sentiments, or it does not look into the fundamentals. This is purely based on technical analysis.
Okay.
So if something were to happen, it might show up in the technical analysis either before or after. I will show you some indications around COVID time, right? So this is the COVID time frame. If you see, the lockdown actually happened somewhere around March 18th or March 12th, March 15th, in that time frame. But if you see, almost for every single stock, it started becoming a sell in our tool right around the middle or the later part of February. And there was an indication that trailed along for almost every single stock at that point in time. So, it kind of, our technical analysis picks up on what is going on, and it will be able to give you an indicator. Will it be 100% leading the news? Probably not, but it will be able to provide you with information that you might be able to act upon. Okay, so this is the aggressive analysis. Now, if you want to do another model, this is our model 3 recommendation for Beidou. And so if you see here, this is a little bit relaxed recommendation model in which you can see, like comparing these two. I'll keep these two charts side by side, so you will see how many sells and buys came in. So if you see, between, let's say, even take end of June 2020, right? There is this section where it is a buy and a sell. I will not highlight it, so it will drill down. And then there are a few reduce here, few reduce here, few here. This gives you a very aggressive recommendation. But if you look at our model 3, between the same period, like 6:30 to now, there were only 4 occasions, 1, 2, 3, 4, 5 occasions where it was a sell, and the rest is all a buy. So it depends on, what is the comfort level or the tolerance level of the people. Yeah. They could probably follow one of these recommendations and make their own decisions. But the relative strength chart is superimposed on this data as well.
Right. So for a buy and hold investor, okay, probably aggressive is too aggressive, right? So they should go for medium or something, right? Because there will be too much noise.
Yes.
There will be too much noise, asking you to sell, like even though the long term trend is up, right? So there may be you're not selling and buying every day, right? So for a buy and hold investor.
That's right. So there are various reports and various analysis catering to different group of people, and they can pick and follow, whichever they prefer or whichever they want to follow. And so all the options are out there, and people can make up their own mind and follow something.
How about
Right? Okay.
ETFs? ETFs are also covered?
No, ETFs are not here. This is only equities.
Okay.
Okay. So I will go back and show some other reports, and I will talk about few of them. So this is a momentum analysis chart. So here, this is where I was talking about these various market caps. So we have about 12 market caps, which the entire market is divided up into. And this particular report, let's say I'm picking large cap 2, which is the highest of the tiers. And here you can see for the last 5 days, what is the high momentum stocks, and similarly last 10 days, 15 days, and 20 days of trading, right? And so this gives you an indication of what are the stocks that are being in the news, momentum wise, and people can look into this, and if they want to pick something and they want to follow or trade, they can do that as well. So, and you can see that for, sorry.
So for Twitter, what are those numbers next to it, like 23.54 and 36 point? What are those numbers?
That's the percentage that has increased in the last 5 days.
Okay.
So if you look at Twitter's stock performance, right?
Right.
So see, this is the time Twitter turned around in our recommendation, and that is also a kind of a lower point in Twitter's relative strength. It turned around and it's been on fire, and this is what it's been going on. Between January 26th and February 15th, it has gone from 51 to 73, almost a 50% increase. And that's what this is showing.
Okay, that is a percentage over so many days. Okay.
Yeah. This is all percentage of increase for that stock over so many days. And the first line is the 5-day indicator, like 5-day increase of that particular stock. And these are the top 25 ranked ones in that sector. And if you move to any other ones, it will show you the top performing stocks in that sector.
Right. Now if you want to understand where the whole market is, right? So because you don't track ETFs, how do you find what is the total market sentiment, whether it is a buy or a sell?
Yeah, that report is not here. We have that in the other version, and there is a market sentiment, and in that it shows whether market is in the range or it is completely oversold or overbought based on our sentimental analysis, our technical trading, right?
Ganesh, one question. This is Ajay. Does the tool provide you like the top 5 stocks that you can buy, for example, today?
That's a very good question. I will show you that report in 1 second. So let me get to that and come back to what I was going to talk about. So this is the report on the top 10 stocks by relative strength, and this is also updated on a daily basis. So let's say I'm not sure why this is not showing as of last week, but here it is showing you the top 10 stocks for each market cap for that particular weekend as the best performing stocks in that segment. So this report will give you that information, and you can go back and pick any week, and it will give you across all the market cap what are the top 10. And if you want to see only a particular market cap, you can go back to this other report. And so here, this is for the last 10 or 15 weeks for our large cap 2 what are the best top 10 performing stocks. And so this is the list. Tesla has been number one for almost a year now. And you can see Beidou, Square, Edward Sciences, Taiwan Semiconductor, Twitter, etc., etc. So this is the top 10 of course.
So it is more of a weekly report as compared to a daily report.
Yeah, the daily report you will see in the momentum analysis, the one that I just showed you. So if you go here, this is your daily report. So you can pick any day and you can pick any of our market segments and you will get the top 25 performing sectors. And the other reports give you on a weekly aggregation.
Thank you, Ganesh.
Okay, so moving along. So here is something, there is an analysis by various sectors. So here we track 29 different sectors ranging from agriculture, it's sorted in that order, to water and waste. And we have various sectors and stocks belonging to that sector. And this is the list that we update on a very frequent basis. So if there are some stocks that are long-term looking as a non-performing stock, we will make a decision to take it out. So we will keep this list fresh. So if you see here, let's take last 30 days, right? So you sort by last 30 days and you see which is the best performing sector. And obviously now it is home. And you can drill down in home. And you can see all the companies that make up the home sector. And you can decide to do what you want to do, whether you want to pick one of the top ones or invest in this sector as a whole. You can make those decisions. And you can drill down further into that to get through the aggressive recommendation chart as well as the model 3 for that particular stock. Okay, so you can do that.
Do you factor in VIX in these calculations by any chance?
We don't factor in VIX, but it comes in different forms because we track about 29 different metrics to come up with a buy, sell, reduce recommendation. So, the VIX data will eventually flow into one of those. But explicitly, we don't superimpose VIX data on top of a particular stock's performance to look into it because that will skew our numbers a little bit.
Okay. And what is the source of your data? Like market data? Do you get it from any of the market data providers or where do you get it from?
Yeah, we purchase data from a data provider.
Okay, thanks.
Are you public or private?
Sorry, what was that?
So I think Jorge wants to buy your company stock.
Okay.
So a quick question.
Okay.
Hey, Ganesh, a question. You have a small cap 1 and 2. What's the difference in that?
Yeah, what we do is we segment the sector, the entire stock market. There are totally roughly about 4,300 stocks. So what we did was we didn't want to give a recommendation, considering the performance of 4,000 stocks. It is really not realistic for somebody to get a very objective view because people's, the way people look at stock market is two different things, right? There are people who look into only sectors. For example, if somebody is in the technology field, they skew more towards technology stocks because they know that field better and they try to stick to that. Somebody that's in the medical or pharma or biotech field, they stick to that. Somebody in, let's say, goods and services or food industry, they tend to that. I've talked to hundreds and hundreds of people that work in various sectors to get a feel for what they do. When I'm talking to somebody that's in therapeutics, they will come and tell me, hey, did you know Verve Therapeutics is doing so well? I'm like, I have no idea what Verve Therapeutics is. But if you go really look into it, that stock might be doing like 200% over the last year. So every individual has their own way of looking into the data. So what we did was, instead of taking all the 4,300 shares and just giving them ranking based on that, how much ever we can segmentize the data into multiple buckets, people will get much more clarity on the various sectors, and that will help them look into, invest in what they are interested in. For example, like let's say look into this, right? The one that I just showed you. If you take sector performance, so last 30 days, health insurance is the worst. It has gone down 9%. So if somebody is really interested in health insurance and they are tracking this, very religiously, this would have given them an indication to say, at some point in time, health insurance is turning around. You could have seen that for every single one of these stocks here. Like if we take CVS, right? You see, CVS started going down here. It already started showing you reduce. It hit a low point where the relative strength also was at a low, and it turned around, and now it is going back up. But overall, the sector itself is down like 8 or 9%. So if somebody is interested only in these stocks, they could at least save some of their losses and find a better point to get back in. That was the whole idea. So that is why we segmentize the data into these 13 different market cap related segmentation, and also by our own curated sectors, which we are looking at here. These are the 29 sectors that we track.
So is small cap 1 and 2 separate sectors divided by?
No, they are not sectors. They are divided based on their market caps.
So small cap 2, small cap 1 is probably bigger cap than 2, I guess.
Yeah, again, like if you really go look into the each stock, it may not be fitting that bucket because there are so many things that change. For example, there could have been a run up in the stock, and we don't keep moving stocks from bucket to bucket on a daily basis. That will never give you a good sense of whether that is a highly volatile stock. For example, let us take a stock called I think Bio-Nano Genomics or something.
Ganesh, but basically you're saying, so small cap 2 is probably less than 5 or some. I'm just giving an example, like 5 billion and below, and then 1 is probably above 5 billion, something like that, right?
Something like that, exactly right. There is also volatility taken into consideration in determining whether it is something that is worthy of putting in large cap 1 or large cap 2 versus small cap 1 or small cap 2, things like that. Okay,
Ganesh.
So looking back here.
Ganesh, this is Gopi. Yeah, you mentioned something interesting, the Bio-Nano Genomics, bingo. Like I've been watching that, and essentially, like, it was going up, but like it's kind of holding steady now. So I mean, what was your analysis on that?
See, the thing is, I really don't look at every individual stock, but we could look at. I could just pull up that, and maybe we can see together.
Yeah, just because you mentioned it, I was wondering what you had to say about it.
So this is how our recommendations changed for Bio-Nano Genomics.
Mm-hmm.
So if you see this, right, on the relative strength front, see, this is one thing that I focus on in my reports. If you see historically, the relative strength was kind of at its lowest on this period. I don't want to highlight it on this period. You can tell that it was low, and it started turning around right at this point. So when this turns around and also our recommendation turns around, that's a point to look into and start getting in. We don't know whether this was just a dead cat bounce or whether it was really going to go up. Coincidentally, for this particular stock, it went from like 50 cents to $13. Whoever got in and whoever was following. See, this is what I was talking about. There are some who are, focused on particular stocks, and if they want to track those stocks, they could do that.
Yeah. Okay. Thanks.
So, this is how it panned out apparently.
Wow.
Ganesh, can you do the same analysis for Merck? Since Bala spoke about it, it may be good to just see that.
Yeah. So this is our Merck chart. So it's still not showing any signs of turning around.
Right. It's still showing sell, right? Sell.
Yeah. So which means, if you don't own it in your portfolio, you are better off just holding off until this.
What about Pfizer?
Fine.
Still
same.
I think all the pharma stocks are about that.
Don't tell me, Gopi.
What about J&J?
No, if you look at Moderna.
Yeah, Moderna. Yeah.
See that Moderna went from a dog to a stellar at a relative strength of 13-1, and ever since it has never come down.
Can you check
It's been doing
J&J?
J&J.
Yeah, Nari made a good bet on Moderna.
Yeah. I bought at 23.
Nari is a genius.
Yeah, I think you're lucky, Nari. Whenever you buy something, it goes up. So just let us know when you
Let
do
us
that.
know. Exactly, let us know.
So Ganesh, what is the difference between free version and paid version?
Yeah, paid version has lot more reports, and you can create your own portfolio. For example, even though our engine collects all this data, I personally don't trade more than 20 stocks. And at any point in time, I don't do a lot more. If at all I'm interested in a sector as a whole, I will buy a basket of that sector rather than buying 200 stocks. So it depends on what people want. With the paid version, you will be able to create your own portfolios, and it will send you email notification on a daily basis, like I showed you, the email sample I showed you. So you will be able to see that in your inbox. And so that's a reminder of how your stock is doing. And you can keep a close tab on it, not necessarily looking at it on a minute by minute basis.
Ganesh, I have a question. So the folks that are developing this app, what is their background?
Folks that are developing the app, meaning the technical analysis behind it.
That's correct. Yeah, I mean, how you come up with these algorithms and how do you keep adapting to it? What is the structure of the organization that is developing it?
It's finance and technology, basically. Because we also keep looking into how to make the technology easier as well, and we also do a lot of financial analysis, and we kind of merge those two to make it palatable for the retail investor to be able to get what they are looking for, rather than we try to keep it simple when it comes to the report itself. So that's why we came up with the simple recommendation of buy, reduce, and sell flags. So at the end of the day, no matter what report you are in, if you drill down to the bottom of it, you will be able to land on a particular stock with one of these recommendations on a daily basis. And what people do with that is up to them, but we kind of put this information out for them to look into.
Got you. Thank you.
Okay, so I'll show you one last report, and I will leave it at that because we only have about 10 more minutes. So here are some of the reports that is of interesting indicators. So you look at this called raining by, an interesting name we came up with. So here what this tells you is some of the stocks in these various sectors and how they are performing. For example, if I were to take, the week ending last week, and I did a sort. So home is 100% buy, which means almost every single stock in the home sector portfolio is a buy. Okay, if you take airlines, same. Every single one of them is a buy. So like that, this report gives you an indicator of when and how a sector turns around from being a sell to a buy. I can show you some trends in the past, but these things are not very intuitive if you're looking at it on a daily basis. They always say, hindsight is 2020. But if we build that discipline of looking at the data, when it is showing a bottom or a top, then we just need to apply the past performance and the lessons we learned and make decisions accordingly. What do I mean by that? I will take one scenario and I'll explain. Okay. So this is a chart which compares SPY versus the sector that we create, right? And this is the comparison of agriculture with that. Let me just add oil to it because this is interesting. Okay, so you see what happened here. So this is oil. The green line is oil. No, green line is SPY, sorry. Let's take agree out. Okay, so you see oil was down here in November and it started turning around at this point. And if we follow this chart, we could see the trend that the oil sector as a whole is turning around. And you could have seen this if we are looking at the weekly report by sector. And if I go back and show you kind of a snapshot of oil, you could see for the previous 40 days, like this is when, right? 1029, right? So now that you saw this chart, let me go back to the numbers, right? So you look at oil, yeah. Last 6 months, let's take, right? So you see oil for last 6 months, it's gone up 26%. But if you take last 1 year, it is up 16%. But at that time, right, in October, first week, second week, third week, November, first week, second week, you could have seen a clear trend that oil was bottoming and it was turning around. And so when people are looking at sector-based investing and they are constantly looking at their data, they will be able to catch these kind of opportunities and be able to make a good decision in what they want to invest. So that is one of the things about these reports, that we aggregate the data at a weekly level so they could get some sense out of it. And there are many reports in the deep dive analysis where people can go look at. One of them is stock making some big RS moves. If you look at this, no, I'll show you a better one. we'll take this, right? So if I take a large cap to valuation, so these are the stocks for 122 that is making a really high move. And to see what is the actual move that it is making, if you go to this report, stocks climbing RS ladder the most. So for week ending last Friday, Illumina 4 weeks ago was at a relative strength of 197, and as of 2 days ago, it was a relative strength of 23. So it has climbed 174. So you can sort this in a descending order, and you can pick some of the ones that are slowly turning around and start focusing on these stocks to eke out a gain, right? This is the 4-week change and the best performer, which is Illumina. But if you flip that around, you get, J&J and Intuit and Oracle. And these are some of the things that are turning around. They may end up being at their top for the next month or so. But, we could put them in our portfolio, watch it, and try to make decisions.
Nice.
So there are so many reports like that, and people can play around and see what they get out of it, and they can pick their portfolio.
So
and for anybody that is starting afresh,
sorry, all these reports are available in the regular version. So
yes, all these reports are available in the regular version.
Oh, okay.
So Ganesh, do you have to set up an account, or is it just an open site?
This one is open. You go to tenetanalytics.com.
Mm-hmm. Okay.
I put this site on the WhatsApp group a couple of times. So you go to tenetanalytics.com, you'll be able to see this. But in the paid version, you have to register with your Gmail, and then you can create your own portfolio and do a whole lot of things.
I see. Okay. And what do you charge for the paid version?
It's $25 a month.
I see. Okay.
So can you show GameStop? It'll be interesting to see.
Okay, there we go. GameStop. So anybody here who made at least 200% last year?
I got one free GameStop when I joined Robinhood, and I sold it for $350. Only one stock though.
Nice.
I think
so. This is how.
I mean, since March, at least I've seen it double, so 200%.
Yeah. I mean, you can see here, right? At this point in end of July, August, it had a relative strength of 410, and it steadily went up, day after day, week after week, month after month, until it hit 16. So look at that, going from 410 to 16 in relative strength. That's amazing.
Yeah. So but see, if you look at it, right? So it is green all the way when it reached the top, and it is still green when it came from maybe $350 or something to $50, right? So it was green all the way. It did not give you a sell signal.
Yeah, it gave the sell signal right here.
Yeah, but by the time the damage is already done.
Well, my point is nobody should have ever gotten into GameStop.
No, I'm just trying to validate your algorithm.
Nah, GameStop is an anomaly.
Yeah, I know it is totally, no algorithm can predict it.
Do you have, Ganesh, do you have any idea on what type of stocks this algorithm is good for and what type of stocks it's not good for?
Like, I generally do not look into anything that is not even $1 billion or a $2 billion market cap, because they are highly volatile. You might make 100%, you might lose 80%. So I never, hold my heart every night and go to bed. So I never look into those things. I generally stick with something that is in a stable position and try to make out of that. For example, I'll show you this interesting chart of Pinterest, right? If you look at Pinterest, you see Pinterest had its lowest point, like right here, at a lower relative strength of 332, and it steadily went up. There is no reason for us to be looking into like a penny stock or a $1 stock trying to make something. You could make money on a stock like Pinterest from $40 to $90, and you don't need to worry about what will happen tomorrow. That is my philosophy. I don't go for something that is I don't go for stocks like GameStop. But I have to say this, a disclaimer, just for the Wall Street bet guys, I bought like 5 shares just to show them support. But I knew I was going to lose everything on that. But, I never look into those kind of easy wins or something that is that's highly volatile. I stick with the higher cap stocks because I've seen in my 7-8 years of back testing, you get opportunities in the top tier stocks and you could make 50, 60, even 100% sometimes. If we look at the right stocks and you pick the right stock at the right time, by constantly just looking at the data and waiting for the opportunity. One classic example would be Beidou and Alibaba. Like, look at Beidou, right? This was like a dog for a long time. Look at this stretch. It did nothing, and suddenly it got into fire and it went up. So sometimes, we just need to be patient and wait around. Look at this, at 71 to 313 in a matter of 4 months. So these kind of opportunities arises in the largest of the large caps. Mm-hmm. So that's my take. I don't look into some risky ones, but everybody has their own preference, right?
Yeah. No, this is great, Ganesh. So
yeah, definitely.
So we will definitely test it out, and we can.
Because the free version is there, we can easily test it out.
Yeah, exactly. So that's good.
Hey, are we using a coupon code Nari?
Yeah, Nari. You put Nari, you will get 25% discount.
25%.
This is very useful. It's helpful. I've already started testing it out on my other computer.
Nice.
Yeah.
Yeah. Thanks.
If you're
I think Ganesh, this is really good, Ganesh. I think.
You
the data, the dashboards, and all are very helpful. Yeah.
So one question, right? So any specific reason your logic doesn't work in ETF, or what is the reason you are not doing ETFs?
No, it is too much work for us to keep up to date of all the data. Even here, right, we run into some issues like, our provider may not give the stock split data at the right time. And you will suddenly see the recommendations not getting updated properly. So we scratch back and make the changes and scramble. So we need an army of people to maintain this. If we add ETFs, that is more, work for us. The idea is if we get enough subscription and we are able to pay for the people we are employing, then, we will be able to add more information.
Okay. No, this is good.
Yeah. So if you all support and you sign up for the subscription version, you will see more and more analysis and reports.
Nice. Yeah.
All right. Thank you so much.
No,
Take a look.
this was
If you
wonderful,
have any
Ganesh.
questions,
Yeah, all the best
no.
with your project. We will definitely support whatever we can.
Okay. Thank you so much, everyone. Thanks, Nari.
Thank you.
Thank you.